darkest days actually were earlier this year, in January, February, where our occupancy rates were down into the 70s and 80s, and our room rates were down 30–40%. And I'm happy to say since May, we've seen a consistent improvement in both occupancy rates. We're back now into the 90s in occupancy rates, and our room rates are starting to improve. So I would say we're a heck of a lot better off today than we were.
90 sounds like pretty much where any hotel entertainment company would want to be.
That's normal for us, yes. Okay. It's where anyone would want to be, running in the 90s in occupancy. The convention business is one of the last things to recover in a recovery, as you know. And we're starting to see significant conventions going on our books starting next April. So between now and say the end of the first quarter, I think it's still going to be quite subdued. Companies are still taking a wait-and-see approach to see whether this economy has any traction to it. But we're seeing some significant increases starting in April for most businesses. Now, the financial services industry, all the TARP babies, all the guys that got all the money, they're keeping a low profile. And we have a message for them. I mean, they've got to spend some of their big bonus money they're going to get this year and come out to Las Vegas, because that is where the value is. There's a recognition that gaming companies, and especially ours because we're in Las Vegas and it's a very cyclical market, the investors are getting more interested in us in general, so that's why the public securities are starting to reflect that. But there's also a big interest in assets themselves, on buildings, on resorts, on land, on things that companies like ours own. So we're getting a lot of call volume, actually, of investors that are interested in talking to us, whether they're PE shops or strategic investors. These are calls we haven't had in a long time.